Welcome back to Investing and Trading Live. My name is Josh Lilquist, and we are having a good time talking about the different markets. We talked about some leverage in the last segment. We talked about how investors can use less capital by using the proper assets, which we'll really dissect here on this segment. But we had a lot of people texting in for this free investing class to get started on their trading and investing journey. If you're brand new to the markets, or if you've been trading 20, 30 years, and just looking for a little bit more consistency, just text the word investing to the number 210 for 2 seats for this class. Text investing to the number 210 for 2 seats, and a financial quick start kit. And this kit will actually help you get started right away. So, Al, you kind of gave a little teaser on that last segment about getting paid to wait, which if you're looking at people right now that are listening to the radio here, even though we can't see them, they're probably looking at us like we have two heads. For those of you that are watching the YouTube stream, no, we only have one. And there's a lot of air in them, but a lot of knowledge as well. And let's break down that knowledge a little bit, Al, today on how that really works to get paid to wait. So we were talking about Caterpillar on the last segment, and I want to continue talking about that.
Okay.
So there's a strategy, and don't worry about the terminology here. This is just maybe a little bit different terminology for a lot of listeners. Just think of the concept here, and we'll explain this terminology when you come to this free investing class. But there's a strategy called the cash secured put, where you can get paid initially just to put your position on, and then it's to get paid to wait where you want to get in anyway. So in this case, we're just giving an example of Caterpillar here. Let's just say an investor wants to get into Caterpillar at $205 and say, you know what, if I want to get in at $205 per share, how about getting paid to do that? And there's an option strategy that will do that. And in this particular example that we're giving, it'll pay you for one contract of that $261 at the time of us doing the show here. And that could change based on time and volatility and everything. So you're getting paid $261 to buy that stock where you want to buy it anyway, which doesn't make any sense to a lot of people, Al. I want you to kind of explain how that works, real top level. And I know you talk a lot about that in the investing classes, but explain why we can do that.
Yeah, the important thing is that you can do it, not necessarily
it's because you can,
making sense
right?
out of it. But yeah, it's first of all, you have to decide, you have to identify a price that you want to own a stock at. In this case, we're talking about $205 a share. Well, it's trading above that right now. So what we want to do is wait until it goes down a little bit so we can actually get into that stock at that 205 level. There is an option, as Josh mentioned, that will actually pay you cash immediately today if you put this trade on. It's in your account today that you get to keep no matter what happens. But then when the stock goes down and hits the 205, you're automatically in that position. You own the stock where you wanted to own it. You got the extra $261, which at the very least lowers your cost basis for the stock.
That's a benefit. It's a lower price that you have now.
Absolutely. Now, what if it does? What if it goes the opposite direction? What if it doesn't go down? Well, you just get to keep the $261. It will expire, and then you can just do it again. You may. There are people that make a very decent amount of extra money, extra income by just doing this on a regular basis, never actually taking ownership of the stock.
Yeah.
But we'll kind of go over those things in the class. Now, here's the other thing. This makes it even better. What if it goes up? What if you could have a position on that also would pay you money to get you in at a higher price, to get you out at a higher price if you own the stock? You can do an option position that pays you cash to wait until something goes lower so you buy it at a lower price, and then if you own it, wait until it goes up so you can actually get out at a higher price. You get paid cash both directions, and that's one of the great things about options.
Yeah, so just in a nutshell, there's opportunities and strategies to get paid for price to do nothing. And
exactly.
We kind of threw some terms out there which may be confusing to some people. Don't worry about that. That's why we have these free investing classes. And some people that are listening right now are like, hey, well, 261 is not enough money. That's not going to change anything for me. Okay, well, that's one contract. Why not do 5? 5 contracts on that will pay an investor $1,305 initially. Now, that might change something for some people. So you dictate what you get paid based on the number of contracts you do. So that's the strategy that you can use in options to get paid to wait. And we really dissect that a lot in these investing classes because, for one, as Al was talking about, you can lower your cost basis. And if price doesn't even get there, you still keep that. It's called premium. So come into one of these investing classes and check that out. They're 2 hours, and we go over these different strategies based on what you're looking to get out of the market. Just text the word investing to the number 210 for 2 seats for this class. We're local in Bloomington. That's what people really love about this class. It's actually a hands-on, physical place to go to learn about the financial markets. So, Al, we talked a little bit about the last segment on using leverage and buying power, and you got into options. I want to talk a little more about futures and Forex here coming up because we have a lot of listeners that want to have that second strategy, income strategy, because you mentioned in the first segment, the wealthy people in the world have more than one source of income. So talk about a potential source, a potential strategy to use the market for income with futures and Forex.
Sure. Okay, I thought you were going to say let's do it next segment.
Well, no.
Oh, okay, yeah. Futures and Forex are great, what we call leveraged assets. Futures, Forex, and options are leveraged assets, which means that you can take a small amount of money and control something that is a multiple of that. Within the foreign exchange market, the Forex market, for example, could be 50-to-1 leverage. Depending on the component of the futures market, it might be 20-to-1, maybe 100-to-1. And what we're looking at, let's talk about futures for a minute. That's a family of things where you're basically looking at whether it's going to be worth more in the future or less in the future. And that family is comprised of a number of things. It allows you to trade in the stock markets, so our markets, and then global markets, so many of the foreign markets. So if you want to participate by trading in stocks, you can do that with futures, with the futures market, again, for a much smaller amount of money than it would take you if you were buying shares of stock, putting a portfolio of equities together.
It allows more people to get invested in the markets because if you think about the stock market, if you're going to trade more than 4 times per week, you're required to have $25,000.
Right. You're automatically considered a pattern day trader.
Correct.
And the brokers have no leeway there. They have to do this.
Yep.
You are automatically considered a pattern day trader.
And that comes down from FINRA.
Right.
So by using these other assets, investors can start with as little as $500. I mean, let's just say you mentioned 10-to-1, 20-to-1. Let's just say the Forex market at 50-to-1 leverage. Mm-hmm. If an investor that wants to get started trading investing wants to take a small amount of money, let's say they have $2,000. At 50-to-1 leverage, how much money will that $2,000 actually control in the market?
That's $100,000.
Which is very efficient buying power. So you can do more with less. And what are the futures contracts? What are they?
Okay,
exactly?
Well, you've got all the major stock markets, the Dow, the NASDAQ, the S&P, the Russell. You've got the foreign markets that you can trade. So you can participate in the equity market. And by the way, that day trader requirement of $25,000 does not apply to futures. So
Correct.
If you want to day trade futures, you can do that, and you don't have that limitation.
Your commodities,
sugar, corn, soybeans. Josh has a favorite, which are
lean hogs.
We
haven't talked about that for a
Right.
while.
How about oil?
There you go.
Oil has some nice movement. What about precious metals, gold and silver? Those are part of the futures family. Currencies, individual currencies, interest rates. There's a diverse amount of things that you can trade within that family, which gives you the opportunity, again, with a small amount of money to control something that's a huge multiple of it, but also be diversified in a true diversification, not just having different components of the stock market. For example, advisors will tell you, well, we'll put you into some stocks or mutual funds that are in the financial area, the technology area, healthcare, consumer staples, consumer discretionary, all those things, and you're well diversified. Well, you are, but that's all one asset. And when the market crashes, those assets, the correlation becomes huge, and almost everything gets drawn down.
Yep.
In the futures market, there are things that are not correlated to each other. Corn and sugar don't have anything to do with the S&P 500. Oil and gold typically, or the dollar will move the opposite direction of equities. Yep. So you can have a really, truly well-diversified portfolio with something that trades almost 24 hours a day and gives you fantastic leverage.
I think that's probably one of the biggest perk of the futures and the forex market. So if somebody works during the day, it's tough to trade stocks. It's only open 8:30 until 3 o'clock our time, 6.5 hours a day. Well, if that market is open 24 hours a day, which means we talked about we kicked the show off. People are looking for flexibility and freedom of time. That allows everyday people to do things at night if they want to, or in the early morning. You dictate that time, which gives you that freedom of time, and that's what a lot of people are looking for. So if you want to be introduced to these different assets, we have these investing classes here locally. You teach these, I teach these as well. We had a great class the other night, a lot of great people coming into that class. And, just text the word investing to the number 210-210 for 2 seats for this class locally here in Bloomington. Text investing to the number 210-210. Stay tuned. We got a big segment coming up talking about retirement strategies to protect your portfolio and grow that in all directions. We'll be right back.